Welcome to The Explainer. So, something pretty strange is happening in finance right now. An ancient metal is suddenly shattering all kinds of records, and today we're going to uncover the powerful and kinda hidden forces behind this global gold rush.
Just look at this. Gold prices aren't just rising, they're exploding. We're talking a surge of over 50% this year alone. And the frenzy has gotten so wild that people are literally, and I mean literally, buying gold bars at Costco. It's gotten so crazy, they actually had to put a limit on how many you can grab with your groceries. Wild.
But if you're thinking, oh, it's just investors getting nervous, you gotta think again. The real story here is way more strategic, and it hints at a massive shift in global power. So let's dive in by looking at why the old rules just don't seem to apply anymore.
Let's get into it. This whole thing starts with a puzzle that has analysts everywhere talking, because this gold rally is breaking all the old rules. Okay, so here's the big puzzle that has all the experts scratching their heads. For forever really, the rule was simple. When stocks go up, gold goes down, and vice versa. It's a seesaw. Investors run to gold for safety when the market gets scary. But right now, look at this. Both gold and major stocks are surging to record highs at the exact same time. That's just not how it's supposed to work. It's a huge clue that something much, much bigger is going on here.
So if it's not your typical investor just playing it safe, then who on earth is buying all this gold? Well, the answer to that question, that's where we find the real hidden force behind this insane demand.
And the answer, it turns out, has nothing to do with everyday investors or even the big hedge funds. Nope. The real buyers, well, there's some of the most powerful financial players on the entire planet.
Get this. The main drivers are the world's central banks, and they aren't just buying a little gold here and there. They are buying it at a historic, almost frantic pace.
Just look at the sheer scale of this buying spree. In 2023 alone, central banks bought over 1,000 tons of gold. To put that in perspective, that is more than double the average they've been buying. And get this, it means these huge government-backed banks are gobbling up nearly a quarter of the entire world's annual gold supply. That's just staggering.
And look, this isn't just one or two countries going rogue. This is a coordinated global shift. It's being led by major emerging economies. We're talking China, Turkey, India, you name it. And they are all making the exact same play, moving away from other currencies and just stockpiling physical gold like there's no tomorrow.
But even among these giants, there's one country that stands out. Their strategy is so big, so significant, that it's practically reshaping the entire global market all on its own.
Yeah, we're talking about China. And believe me, they aren't just buying gold. They are executing a massive, complex plan to build what you can only call a financial shield, and it's made of solid gold.
So just how much gold does China actually have? Well, when it comes to their gold reserves, the official numbers, they're just the tip of the iceberg. The real story, at least according to a lot of analysts, is happening behind the scenes, in the shadows. And the numbers they're talking about, they're absolutely staggering. Okay, so officially, China says they have just under 2,000 tons. But, and this is a big but, many analysts believe the real number could be double that. We're talking over 4,000 tons. And they're doing it quietly. They buy it on the open market, and they also soak up all of their own domestic production. And, oh, by the way, they just happen to be the biggest gold producer in the world. So yeah.
So why all this secrecy? Why go to all this trouble? This quote right here from the Bank for International Settlements, it basically spells out the entire strategy. It's about creating a sanctions-proof reserve. Think about it, right? Digital money, foreign currencies, those can be frozen with the click of a button. But physical gold bars, sitting in a vault in your own country, that is an asset that nobody can touch. It's untouchable.
And how are they paying for this golden shield? Well, they're selling off their massive pile of U.S. government debt. We're talking U.S. Treasury bonds, basically IOUs from the U.S. government. At its peak, China was one of America's biggest lenders, holding an incredible $1.3 trillion worth of these IOUs.
And today, that number has absolutely plummeted, down to around $850 billion. The strategy here is crystal clear. You can't miss it. They are trading paper assets, things tied to the US dollar, for physical, solid, untouchable gold. Now, this huge strategic shift by China and other countries, it didn't just happen in a vacuum. It's been a trend that's been growing for about a decade. But then, a series of world events hit, and they acted like a massive accelerant. They turned a steady trickle of gold buying into an absolute flood.
You can literally see the cause and effect right here on this timeline. The real turning point was 2022. That's when Western nations froze about $300 billion of Russia's assets. That sent a shockwave across the globe. It proved, once and for all, that currency reserves could be used as a weapon. So for any country that's a little nervous about U.S. influence, that was a huge wake-up call. And then the recent threats of new trade wars, that just poured gasoline on the fire.
And this whole movement, this big shift, it actually has a name. It's called de-dollarization. It's pretty simple, really. It's the long-term, very deliberate strategy by a growing number of countries to break away from their dependence on the US dollar. And as we've been seeing, physical gold, that is the absolute cornerstone of their entire plan.
So, what does this all mean? What are the real consequences of this global gold rush? Because let me tell you, this is about way more than just the price of jewelry. This golden power play is sending massive ripples across the entire global economy.
Okay, let's break down the potential effects. First, as countries buy less U.S. debt, it could get more expensive for the U.S. government to borrow money. Second, it gives a lot more power and credibility to rival currencies, especially ones that are increasingly backed by gold, like the Chinese renminbi. And maybe the biggest one, it lays the foundation for a whole new global trade system, one that could, one day, bypass the U.S. dollar completely.
So, at the end of the day, this isn't really just a story about the price of a precious metal. It's about a fundamental shift in global economic power. It's about geopolitics, it's about power, and it's about the search for a new, stable financial anchor in a world that feels more and more uncertain. The rising price of gold? That's really just a symptom of a much, much larger power shift that's happening right now on the world stage.
And that leaves us with one final and really critical question. For almost a century, the US dollar has been the undisputed king, the anchor of the global economy. But as we see all these nations around the world building their own golden shields, it really makes you wonder, doesn't it? For how much longer?